Oh my goodness, guys. The stock market is getting worse. The selling is getting ugly out there as the S&P 500 is down 2% right now. The Nasdaq's down 2.3%, and we have the Russell. Are you guys ready for this? Down over 3.3%, with the Dow down almost 2%, and buckle up for this, guys. The VIX up 36%. Holy crap, guys. We have a lot to cover in this video, from the charts, stocks I'm looking at, what I'm looking to do in general. So hit the like button, make sure to subscribe, and don't forget to get up to 20 stocks from Moomoo with at least a $100 deposit. Use that link down below or go to stocksurfest.com/Moomoo, and for a limited time, your uninvested cash will earn up to 8.1% APY, which, guys, that's a no-brainer. So again, use that link down below or go to stocksurfest.com/Moomoo. And with that being said, let's get into it. So, like I said, guys, bad, nasty, ugly day today for the stock market, with the Russell leading the losses, down over 3.3%, which is absolutely insane. And if I pull up the 4-hour time frame here, now this is SPY, by the way, which tracks the S&P 500. Now we're trading under the lows from the other day, where we actually double bottomed at about 538. So now we took out that double bottom support that we were talking about. You guys probably remember that. And we hit a low today of 528. And we actually almost, well, it looks like we did take the lows out from late July, or late June rather, early July, and now we're pretty much at the lows from, it looks like, early June. And did we not call out the head and shoulders on SPY here, guys? Did we not call this out literally to a T? That looks like it's playing out. Now we're at a 2-month low on the S&P 500, and triple Q is looking ugly as well. Head and shoulders, clear as day. Now we're pretty much right back to where we were in the beginning of June. Same with the S&P, right? We're at 445 roughly on triple Q, and we're down percentage-wise 12% pretty much. We're in correction territory officially right now on triple Q. So we actually got some data this morning that I want to break down with you guys. Let me pull this up and show you this data. So we got the unemployment and the non-farm employment change, which we got 114,000, which was the actual number here. The forecast was 176,000, and this essentially is the change in the number of employed people during the previous month, excluding the farming industry. So that came in a lot cooler than expected. And for rate cuts, what does Powell want to see? What does the Fed want to see? They want to see the labor market cool off, and they want to see the unemployment rate go up. I mean, they're not going to say it, I guess, straight up like that, but that's what they want. And guess what? The unemployment rate went up. 4.3% is where it's at right now in the United States, and the forecast was for 4.1%, pretty much to stay the same as the last time, right? So, yeah, unemployment's up. Non-farm came in a lot lower than expected. So this could be opening up the table here for multiple rate cuts, guys, which at the end of the day is good for the stock market, although it's not looking good today per se, but overall, over the next couple of months, this is good for the stock market. But yeah, man, that's the key data for today. And of course, we are seeing a big sell-off today because of, well, some big tech stocks not doing so well. Amazon in particular, it's down 8.3% right now. Apple's actually green, at least it was last I checked. It looks like Apple's up 3%, so very strong day for Apple. And think about if Apple was tanking as well. That's a scary thought. We would be down way more, man, way more. Imagine if Apple was down 5% today. It would be a complete bloodbath, way worse than it is today. And guys, the VIX, for Pete's sake, oh my goodness, I glossed over it in the intro, but my goodness, guys, the VIX is up 35% today. What in the world is this? I mean, the VIX has literally tripled in the last couple of weeks, which is scary. That's scary to look at this chart. We actually almost hit 30 earlier in the day. So you're telling me, guys, the VIX was up at one point 60% today. I'm not going to lie. I can't remember the last time that I've seen that, but yep, we were up 60% on the VIX earlier today, which is just bonkers. I mean, if you look on the 3-year chart here, we're getting pretty close with that move to the highs on the 3-year chart for the VIX, which is scary, scary territory. So let me show you guys Amazon. Amazon stock now is officially in a bear market as it's down 8.5%, or at least it wasn't a bear market earlier today. Now it's probably out because it is rallying a bit. Yeah, now it's down only 16%, but earlier from all-time highs, it was down officially over 20%. So this morning, we hit $160 per share on Amazon. Now we've recovered, which is good, but guys, even though we're at 168, we're still down 8.5% on the day. So at one point, we were down, my goodness, about 13% on Amazon. So it is good that it's recovered a bit, but still down 16%, and it's very beaten down. And we're not really getting any sign of a reversal on the charts yet, but man, it's in desperate need of one at this point, as we are holding above 165 by a thread. And I'm thinking if we take out 165, guys, which was support in the end of April, right around here, you guys see, if we take that out, man, this could be slipping down even more, which I don't really think will happen. I could be wrong on that, though. Who knows how long this sell-off in the market will continue for. But if we do fall through 165 on Amazon, the next gap to fill is here at 155. You guys notice this window right here? Keep your eyes on that. And Apple is holding up. Like I said, if Apple was down on the day, man, it'd be way worse right now. But Apple, it looks like we are getting a pop above the moving averages on the 4-hour chart, which is good. And we can see on this 10-day chart, we have a cup and handle forming, which is also good for the bulls. Now, if we take out 225 to 228, this could play out and we can get a lot more upside on Apple. Maybe it starts going for all-time highs again if this cup and handle ends up playing out, guys. But yeah, that's a quick breakdown on some stocks. Let me see what else is looking interesting here today. And oh, by the way, guys, sign up for my email list. It's completely free. Link down below. I'm sending you guys my top 3 stocks every single Monday morning for free. All you have to do is put your first name and your email address. Again, first link down below. And again, it's free, guys. No spam, no BS, just straight up stocks and charts. I appreciate you all for signing up for that. And yeah, Intel. Oh my goodness, guys. Intel is down like crazy, 27% in the red. Now it's down to $20 per share after being at $51 pretty much at the beginning of the year. Now Intel is down 60% year to date. And if we pull up the max chart, we're pretty much at the same price that we were at. Are you guys ready for this? 2001. This is nuts. Forget about that. 98. In 98, it was at $20 per share, guys. 26 years ago, which is wild. I mean, this stock's gains are gone, essentially, eviscerated just like that, which shows you the danger in holding individual stocks, especially if you have the mindset that you're going to hold a stock forever. Sometimes it doesn't work like that. I mean, look, if you bought Intel 20 years ago at $20 and it ran up to 70, that's a decent return in, you know, it ran up to 70, a couple years ago. So in 23 years, it ran up from 20 to 70. That's pretty good. But to think it's going to go up forever, doesn't necessarily work like that. And now it's right back down to 20. So with individual stocks, guys, you have to be very careful. You have to analyze and keep up with these companies, because if they start to deteriorate like Intel clearly is, your gains that took years and years and years to accumulate, your gains in a stock could be gone like that, literally like that. And it's sad, man. The stock it lost 20 years of its gains. But it is what it is, man. It's part of the game, guys. So with that being said, I'm going to wrap up the video. If you enjoyed it, smash the like button. Make sure to subscribe. We're trying to get to 100,000 subs here on the channel. And with that being said, I'll catch you guys later.